Look, this is really a transformational acquisition for ESR's business in Australia. We have to remember with the pandemic, we've basically witnessed 5 years of e-commerce growth condensed into 1 year. And it's just the start. You know, we've been to this movie before. Australia, in terms of mature markets in Asia, is still very nascent in terms of e-commerce, roughly just over 10% of total retail sales. So as we look to other markets, China, South Korea, over 35% of total retail sales, we've got a long way to go. But the catalyst really got ignited with the pandemic over the past 12 months.
Right. And we all know that supply chains are evolving and reorganizing, and Blackstone, as I understand it, wanted to sell this asset because they wanted to reposition themselves as a last mile operator. So, Jeffrey, isn't ESR left holding a relatively outdated set of assets? And if so, how do you plan to modernize them and make them more relevant? Well,
first off, this is a really high quality portfolio. 45 assets, over 3.5 million square meters, over 3/4 located in the key gateway cities across Australia. So from that perspective, we're getting a very high quality portfolio, and a credit to Blackstone for having assembled it. At the same time, though, you have to appreciate that the site coverage ratio for these assets is still very low, only about 1.5 million square meters of gross leasable area. So there's a lot of redevelopment potential in this portfolio. And as we've talked about in the past, remember, e-commerce companies require about 3 times the amount of space as traditional bricks and mortar retailers to drive the same volume of sales. And so with that, they're going to need a lot of space. Between this portfolio, along with our own development pipeline of over $1.5 billion in Australia, we're really well positioned to capture the continued growth of e-commerce. These facilities are very much still catered towards being able to meet that demand.
Why buy these logistics assets in Australia? Isn't that a relatively mature market, and as opposed to a faster growing e-commerce market in Southeast Asia like Indonesia, or is that next on the agenda for you at ESR?
Well, you're spot on. We have expanded into Southeast Asia. We do like the growth profile. You've got 650 million people, growth rates at 5 to 7% across Southeast Asia. We have set up our business in Indonesia and are looking to grow that. But again, mature markets for a funds management business are very important. 1, our tenants want to be there, and 2, our capital partners want to be there. We've extended our relationship with GIC, who's become one of our largest capital partners at ESR. And as we look at what this transformational acquisition has done to our Australia business, we've now doubled our AUM to over $6 billion in Australia. It makes us a top 3 player in the market. That's critical, again, for tenants. It's also critical for capital partners. And as you look now across the group, over $30 billion of AUM, the largest pure play Pan-Asia logistics developer and fund manager. We think that's going to continue to generate a tremendous amount of interest, both from our tenants, our capital partners, and most importantly, also our public stakeholders.